So I hope it's a different story as usual today. I will talk about what I would call 3 mega trends in banking and finance. So we have fintech that I think you all know, that's already the oldest one. Then there's AI, and of course also the nerdy topic of crypto. Because if you ask me, all these 3 do have the potential to completely disrupt the banking industry as we know it. And therefore, my proposal to you is, and let's see to agree or disagree afterwards, I would say banks we will not see anymore, not retail banks at least in the future as we know them from the past. And I will tell you why in my talk. So let's start with the first one, right? This we know started in Germany somewhat, 2012, fintech. One question to you guys, what would you prefer? Would you option A for you to choose, have an appointment with your banker, or B, visit the dentist? So who would rather talk to the banker? Please, hands up. Okay, good. And now second vote, who prefers the dentist? Okay, usual voting when I asked this in Frankfurt, right? But now it's time to leave your bubble, right? Frankfurt is not representative for the rest of the world. This is a city of bankers, of course. People prefer to talk to bankers, right? Because your friends are bankers. But typically, if you look to the broader world, if you look to Germany, bankers are not your friends, right? And look to this one. A lot of content in this one. Let's just focus on 2 numbers here. That's this Millennial Disruption Index, right? And first one here is, and there you can see how much you are inside the bubble. Actually, 71% of millennials would prefer the dentist over the banker, right? So shocking number one. And keep this one in mind, because we'll come back to it. 73% of millennials would hypothetically buy financial products if they would be offered by tech companies like Apple or Google. That's important because we will come to that in a few minutes. It's a bit shocking, right, for the bankers here in Frankfurt sitting in the glass towers, 25th floor, enjoying the view towards the Taunus. So how will the future look like? So of course what happened is a lot of fintech startups came up, right? This was the landscape 2015, so already quite a time back. But look what happened. That's the most recent one. And you can see there the number of fintechs actually exploded, right? So no surprise. Already a few names are crossed out, of course, also that happens, right? Whenever you see innovation, of course, some also fail, but nevertheless what will remain and what will stay is the technology, and that's the important part, because the technology will change the industry, not the individual company, right? The company is always based on the technology, so that's the important part here. And the other important part to keep in mind, if you look here, unfortunately it's a bit blurry, but you can see here these boxes are the different points of the value chain of a classical bank. And that's now very important. You can see that these startups are attacking every single part of the banking value chain, right? So you cannot say this is a small phenomenon, banks should not actually take of big importance, but no, this is actually existential threat to the banks because eventually a few huge players will emerge, right? And that's what we're currently saying. We have M26, we have Revolut, we have Weltsparen, Raisin. So these guys are now really growing back and are actually really competing with the banks. So that's number one. Now, why is this? I will not go into all details, we'll just focus on 2 simple things. The first one is UX, right? User experience. So if that is what typically online banking looks like, right? That's actually what fintechs are trying to build, right? So you don't have so much joy on this one, but rather you want to use a product like this, right? So what I want to tell you is saying, where does the thought process start when developing a service and a product, right? Do I start from a banking perspective? I want to sell my product based on processes which I have in place. Then I end up with this. Do I start user-centric and really consider what does the user want? Then I end up with this, right? And that is where the competitive edge is of many of those fintech companies. The second one is this one. And this is an argument which in Germany we hear over and over and over again. Users are so much concerned about the security, right? Fintech startups can never be a threat because the banking data will never be as safe with a startup than with the bank. I tell you what, real user behavior and stated user behavior sometimes is very different from one another because this meme is actually very true, right? People who claim to have the highest standards in data protection they require from a product at the personal side often really don't give a shit about data security because they're at the same time using Facebook, WhatsApp, Google Mail, whatsoever on your smartphone, so all their critical data has already been shared, right? So reflect on this a bit. So I would say these 2 points very important for the whole process here. So that has been thread number 1, saying fintech now comes into play when we are talking about retail banking of the future. Now then there is this one, AI, right? Everybody is at this time claiming to do AI, only very few do. Because what you need is a huge load of data. And now ask yourself, who actually owns a huge load of data? Yes, banks do own banking data. But banking data is compared to the data set, which a Google or an Amazon knows from an individual user, is nothing, right? So now, and that's exactly the point what we're seeing, these tech companies are moving into banking, starting with payments, right? Why are they doing that? Because they want to be a bank? No. Because they're interested in the data which is conveyed by this financial information. Because that's for them the last missing piece in order to complete a full data set, right? And once they have this full data set, what would them actually make from stopping offering banking services at the last mile to the consumer directly, still not producing the banking product? A bank will do, but just in the back office, but the bank may lose the direct contact, the last mile to the user. Why do I think that? Well, look at this one. Consider how the interfaces have changed over time, right? A few years back, there was no internet. So you have your own shop, your user comes there, he can call you up, all fine. Then there's the internet. The internet is free, right? Nobody controls it. So every bank has its own website. Still very easy, you just type in the address. Next level is this one, right? This one is now controlled by 2 companies, right? There is the App Store and there is the Play Store. And now, of course, these companies operating these stores are already charging for the services if you want to sell products over their stores. Now the next level is this. These 2 companies are now inventing AI-based personal assistants, which they basically want to bring in the home space. And if now Alexa can answer the question, I'm looking for a new current account, which provider should I choose? Then the question is, which answer will Alexa give, right? So, even so, I may currently have an account with Deutsche Bank. Alexa may then say, okay, why don't you open one with Commerzbank? Right? And the user may do that using this interface. So what I'm saying is, the last mile, the direct contact to the user is actually getting endangered, and it's getting endangered exactly by the companies who do own a lot of the data, and the data they can use to do the financial advice. So the bank actually becomes not required anymore. The only thing the bank still needs to do is producing the banking product, right? But there is no direct end consumer anymore. So essentially the banking products, which are commodities any which way, even increase the level of stiffness of competition here. So that makes it even more important for banks to control your cost, right? Because if you have a cost disadvantage in this environment, you are soon out of the game. Now, last but not least, the most crazy part, crypto, right? And I know. But now many guys in the room will say, right, crypto is completely crazy. Why even spend a few minutes thinking around this one? Well, bear with me, right? Yes, I fully agree. Where we started off with, that was when basically Bitcoin reached a better level of public knowledge, mid-end of 2017 with a complete hype, right? People were actually quitting their job to become crypto day traders. Fun fact, if you at this time would have searched on LinkedIn for Binance, the most exciting, most famous crypto exchange, you would have not found employees working at Binance, but you would have found day traders having actually quit their job, like the guy on the picture, to day trade crypto and then putting this to the LinkedIn profile, right? So literally everybody was shouting out, invest in Bitcoin. Crazy story, but true. Now, of course, the question is, how does this market hands off, right? But you could actually also use this for crypto, because many people would have now said, okay, that's my conclusion on the market. But I completely disagree, right? It would be very sad if that would be the whole story, because what I've just told had nothing to do with the underlying technology, right? We were talking about people trading, a story of greed, where people thought they could get rich, not genuinely interested in any use case behind, not genuinely interested in technology. So let's take a step back and talk about what happens currently in the crypto market, because that's very, very different. Firstly is, we started off with an anonymous market, right? I always call the guys crypto anarchos who actually wanted to become more independent from states, from big corporations, who invented the whole thing, right? From Bitcoin founders actually not really known. And then you have the crazy guy, also with alpaca shirts from Ethereum, right? But of course that's nothing which people in this room in a city like Frankfurt would take for serious. But now the game is actually changing, right? These players whose logo you can see here have come into play. Facebook is launching with a strong network of partners, the Libra project. We have JPMorgan inventing their own coin. Amazon actively discussing to do so. Starbucks already accepting in the US. So multi-billion corporations are getting into the play now. So that's very different from what we saw earlier. Number one. And funny enough, this guy, I guess most of you know him, the CEO of JPMorgan Chase, right? So he at first said Bitcoin's a fraud. Now they're working on their own coin. What? This guy, you also know him, right? He banned crypto completely from Facebook, beginning of 2018. Now they're working on their own cryptocurrency. And this just in a few months, how could that actually happen? Is there maybe something behind this crypto craziness? Some real stuff, something you can do with it? Well, maybe if these guys are changing their mind publicly, which could be interpreted as, man, have you been crazy before? Didn't you think about it? Have you been an idiot? No, but they're publicly stating it and saying, no, this is a good direction to go. So, escalated quite quickly. And that's funny, because that's the second point. So not only that cryptocurrencies are growing up, becoming more reliable because multi-billion companies moving in. Look at this chart. So the green line is the Bitcoin price in US dollars. The blue line is the search frequency of the term buy Bitcoin globally. So what you can see is that the first hype, end of 2017, was driven by a big hype in the search term buy Bitcoin. Right? What I explained earlier, I want to get rich overnight, don't know actually what it is, don't care, just buy it. But look what happened now after the price broke down, and now the recent movement up here, we didn't see this. Right? So at least the hypothesis could be there that the investors behind have also become more professional, more institutional, because now seeing what you can do with the technology, now anticipating which use cases can be there. And that brings me actually to this point. So I think the queue now at least has a bit shifted also to understanding what we can actually do with the technology. And now let's, once we have talked about this, take a step forward and think about the future. So this is the typical Bitcoin use case as you may know it from Berlin, right? The hipster guy going to a fancy coffee shop, ordering his fair trade soya latte macchiato, and so on. Not a real use case. But what we will see in the future, and I'm convinced we will see this use case. And once people can pay using cryptocurrencies at Amazon, guess what? No explanation needed anymore to explain what a cryptocurrency is, right? So, explained by itself, trivially by a use case which is striking, right? And the same was true for the Libra project, actually. If I can send Libra at the end via WhatsApp from one friend to another to share money, I don't give a fuck about the technology as a user, but I will adopt it because it's quite fucking convenient, so I like it, right? And same here, if I can get a discount at Amazon like 2%, if I pay an Amazon coin, then I will also do it. Not because I like crypto, but I like to get the discount of 2%, right? So what I'm trying to say is once these use cases come into play, what we will see is that there will be a multi-currency environment taking place. It will not be sufficient anymore for a user to just deal with his home currency, right? And at this point, let me ask you one question. How valuable for you is your old fiat banking current account where you can only keep euro? Not so good anymore, huh? Fuck. So maybe banks should consider to also integrate crypto in their offering. So you may say, okay, what a crazy guy wearing a crazy shirt. What do I give a fuck about what he's saying, man? Just want to end with one question. What if this was my first modem, 1998. Motorola, right? Only a few people, I guess, in this room remember the company. And this was my first modem, but what if this is the current state of crypto, right? And then you know what went off in the internet. So I don't want to continue this one. So just to sum it up, these three trends have already hurt banks substantially and will hurt them even more in the future. Banks have now started to at least decide to move. I personally think they are not yet moving fast enough, and some of them are not yet moving in the right direction because they're still too hesitant to remain on their old systems. But if they're not moving, and that I'm convinced of, they will not be there anymore in the future because they cannot actually deliver on the customer needs, on the 3 megatrends of fintech, AI, and crypto, which will become very soon the reality in retail banking in the world we are living in. So that's my 2 cents. Thanks a lot and looking forward to a discussion.